Do you have $1,000 to invest right now? Are you looking for a higher risk but potentially higher reward investment? Want to collect a market-smashing 7% yield? Then you have to check out today's video.
He is a best-selling author.
30-year-old Jason Fieber has a plan.
This guy retired at only 33 years old.
I don't know if I know too many people that have accomplished something like that.
He's really kind of a guru when it comes to passive income.
Before I get into today's content, please give us a big thumbs up if you find value in our videos. Helps us to get the word out and grow the channel, and I'd really appreciate it. We recently put together a video highlighting a low-risk long-term investment idea for a $1,000 investment right now. I discussed Johnson & Johnson as that idea. It's one of the bluest blue chip stocks you could possibly think of, but risk and reward often go hand in hand, and higher risk stocks often offer higher dividends. What if you're feeling a bit adventurous? What if Johnson & Johnson's 2.5% yield just isn't enough? What if you want to juice the overall yield of your portfolio? What if you want to take on more risk to potentially receive more long-term reward? Well, that's what today's video is all about. I'm going to tell you about a higher risk, but potentially higher reward dividend growth stock to consider for long-term investment. So if you have $1,000 to invest right now, you might want to take a good look at this one. Ready? Let's dig in. A higher risk dividend growth stock to consider for investment today is Enbridge Inc., stock ticker ENB. Enbridge is a dividend dynamo. How about a 7% yield? Yep, Enbridge offers that. How about 25 consecutive years of dividend increases? Yep, Enbridge has done that. How about a 10-year dividend growth rate of 11.3%? That's Enbridge for you. How often do you see a 7% yield and a double-digit long-term dividend growth rate? You almost never see that. Enbridge is a fantastic dividend growth stock for investors looking for more yield than your average dividend growth stock can provide. This energy transportation company is pipelining more than just oil and gas. It's also pipelining big dividends straight into brokerage accounts. But it's not all dividends and smiles. There's some risk here to consider. Energy is a very volatile place to be, and the world is starting to move away from hydrocarbons. However, while I do think of Enbridge as a higher risk investment idea, I'd argue it's not as risky as you might think. That's because Enbridge isn't highly exposed to volatile commodity prices. The company estimates that 98% of its cash flow is predictable through regulated operations, take-or-pay contracts, or fixed fees. And we saw that predictability shine through during the pandemic crisis that sent energy prices crashing. Enbridge came out of that situation barely scathed. And unlike what investors experienced with a lot of other energy companies, Enbridge didn't cut the dividend. In fact, Enbridge increased its dividend in 2020 right on schedule. If you're looking to live off of dividend income, you need that income to be as reliable as your bills are. And Enbridge has been incredibly reliable for decades. They proved their worth once again over the last year. Despite the 7% yield indicating the risk of a dividend cut, I actually see the dividend as quite sustainable. Enbridge is guiding for $4.85 Canadian in distributable cash flow per share for this fiscal year. Their $3.34 Canadian annual dividend takes up less than 70% of that, so the payout ratio isn't dangerous, and this DCF per share would represent nice growth over the $4.67 Canadian they did in fiscal year 2020, which actually exceeded their guidance for last year. With all of these goodies, you might think investors were bidding the stock up. Nope. The stock actually looks cheap from multiple angles, which does make sense when you factor in the elevated risks. I think the market is being prudent here. Nonetheless, the forward price to DCF ratio after factoring in the currency exchange rate is only 9.7. That's analogous to a normal stock's price to earnings ratio. With a lot of stocks in the market sporting price to earnings ratios of well over 20, you can see how cheap this stock is. Also, that 7% yield, yeah, that's 130 basis points higher than the stock's own 5-year average yield, not to mention way higher than what the broader market offers. I mean, the S&P 500's yield is below 1.5%. Enbridge's yield is more than 4 times higher than that, although you have to remember there's a currency exchange issue at play here for American investors, as well as a possible Canadian withholding tax that you'd have to reclaim at tax time if you hold it in a taxable account. This dividend growth stock offers a very juicy yield to investors willing to accept the risk. It won't compound your wealth exponentially in the same way that a lot of lower yielding, faster growing dividend growth stocks out there will do. That's just not what this kind of stock does. Instead, it's a cash cow, cash which you can use to reinvest and buy more stocks or pay your bills. And remember, that cash flow is big, passive, and growing. You have to accept major environmental, regulatory, legal, and even outright business model risks. But if those risks are acceptable to you, there's a lot to like here. By the way, stay tuned for an upcoming video where I fully analyze and value this stock. Thanks so much for watching. I hope you enjoyed today's video. Give us a like if you did, and let us know in the comments what you think about this higher risk long-term investment idea. Please make sure to subscribe to the channel and ring that notification bell so that you don't miss out on new content. Also, take a look at the description box below for some important links, including the link to my personal stock portfolio. This 6-figure portfolio, which I call the Fire Fund, generates enough passive dividend income for me to live off of. It allowed me to retire in my early 30s. I've made my portfolio entirely accessible over a Patreon, and I also post alerts there whenever I buy or sell a stock. I put my money where my mouth is, and I'm often invested in the same high-quality dividend growth stocks that I make videos on. Over the years, I've heard from thousands of investors who have been profiting from many of the same exact stocks that I own. So if you think this is something that you could benefit from as well, check the link in the description to see my portfolio and start getting my buy and sell alerts. I'll see you next time.